Hey, what's up, everybody? Welcome to your Monday. I hope you had a great weekend. I've been hearing it a lot lately about what's going on in the world. What do you know? How are things working? What are we going to do? Prices are going up. Interest rates are going up. Uh, distraction in Ukraine, all this kind of stuff, right? And those things are all true, but those things also have tremendous impact on investing, have a tremendous impact on what goes on in the world. If you're looking at the stock market, it's having some troubles right now. Why? Because people don't believe that it's going to continue to be there for them, and the investment that they're looking at isn't something that they feel is going to take care of them through these tumultuous times. But let me just tell you something. According to Webster, an investment is the outlay of money, usually, right? Usually is a key word here, for investment or profit. Capital outlay is the sum invested of the profit or in anticipation of profits, right? So the reality is, guys, if you're investing in something that you don't see profitable, right? Earnings on Amazon, what is that looking like in reference to what you're paying for the stock? If you really just start doing multiples on Amazon stock versus what it makes, how much a share is profitable, that investment looks terrible. The only way that most of people are looking to make money on Amazon stocks is by buying the stock at 50 bucks and selling it at 80 bucks. But that's not really an investment as much as it is hope, because what's in there that's going to take care of that? What's going to cover the cost of capital? What's going to do the things that are usually required to fund an investment? When you look at what happens in real estate, it's a very different investment, right? I mean, people ask me all the time, Shannon, is now a good time to buy a house? Well, yes. Why is now a good time to buy a house if we're at record highs? Well, because we're also at record low supply. So supply and demand cause a problem, but they're going to get caught up. Eventually, the supply is going to meet demand. Maybe, but currently, depending on where you look for it, I just saw yesterday something came out from Fannie Mae that said we're 3.8 million housing units short in America right now. Now, we need 1.6 million housing units a year to be normal, to keep up with just the normal growth. So we are an additional 4 million shorter than that. And we don't have the ability as a nation to produce more than about 2.2 million, which means if we go full steam ahead for the next 5 years, we will eventually keep up with the demand that's currently here today. So if you don't like housing prices today, don't expect the scarcity to change. Don't expect things like supply chain issues to get much better. Don't expect our all of a sudden our pricing to go way down again on lumber. I mean, prices are kind of here to stay, right? So when you look at what an investment is, if you're investing in housing or you're investing in commercial real estate, you're laying out money in hopes that there will be profits in the future. And how do you know how to gauge those profits? Well, the easy thing about existing real estate is you can bank on the cash flow, right? You can look at that and go, I can put $40,000 down on a $200,000 house. Now, this is hypothetical. Your market may be different. And I can have that asset and it will make money that will pay its loan while it grows, right? While the asset goes up in value, somebody else is paying the loan. Will there be some cash on cash return? Yeah. As we continue to see what really is the shakedown and the relevance of what happens when the Federal Reserve and the U.S. government goes on a money printing binge like nothing that's been seen in history, you'll continue to see how that all shakes down. You'll continue to see what's going to happen with that market. But while we're doing that, your investment is being paid for largely by somebody else. Now everybody goes, oh, but remember the financial meltdown of 2008? Yeah, I do. It was very painful, guys. I mean, it was extremely painful. But the reality is, everybody was investing in something that they could not afford. They were margining their positions, they were buying funky loans. And when the bird came home to roost, nobody could pay the bill, right? But what we're seeing here is a scarcity situation. In 2008, we were very well balanced with supply and demand. And if you don't like the thought, go back, check the facts. That's cool. I appreciate that. But at the end of the day, we have to look at why are we seeing what's happening happen? Why are we seeing prices continue to escalate? You know, it's a funny thing. If you go clear back to 2004 with pricing versus our cost of capital. In 2004, you were borrowing at 7.5%, 8%. Yes, you were buying a much cheaper house, but if you owned that house for the full 30 years, you weren't very different than the price you're paying up until a couple months ago when you were buying a $400,000 house and getting a 3% mortgage. And if you don't believe me, again, go back and do that math, plug it into a mortgage calculator. Tell me what you think. But the reality is, from 2004 to 2022, you've seen a consistent growth long term. Most people jumping in and out of housing that got hurt in 08 weren't thinking long term. That's why they dumped the house, right? I always tell the story about a good friend of mine that bought a house at absolutely the peak in 08, 07, continued to make the payment, paid it all off. It's now worth 2.5 times what he paid for it, even though there was times when it was worth half of what he paid for it. But he continued to look at the long term of that relationship. It's now paid off. So I would encourage you guys, if you've got questions, comments, or concerns, hit me up. Go to my website, shannonrobnett.com, or click in the comments here below. Let's have a conversation about why now is a fantastic time to invest. Why now is a great time for you to be putting money to work in real estate because of the demand that is not going away. We're not going to just magically make things happen. And as our government has shown us, they love to intervene in free markets and interject themselves. So look for that. I bet you're going to see that we're going to see rent credits. In fact, I think New York has now done this where you can take a tax deduction for rent paid on your personal rent, because they realize that a lot of people in New York can't own a home, and they felt that it was unfair to not reward the renter like they would reward the homeowner that is renting the house out, or the property owner, right? So you're going to start to see, in my opinion, you're going to start to see rent credits, or you're going to start to see handouts from the government that are going to allow people to pay more in rent, because the government created the problem in the first place by printing all the money, right? So here we have something that's going to sort itself out. Give your comments below. Like it, right? Let's see. I got to figure this out. Like it right here. Go to shannonrobnett.com. Like the YouTube channel, guys. We will be doing more of these videos that kind of get into some controversial thought, because I definitely see that there is a lot of growth left in the market currently and in the 5 to 7 year future because of inflation. That is what's causing all prices to go up, including rents and including what people are paying for other things. So go to my website, go check it out, hit the YouTube channel. Would love it if you'd like and subscribe it. Leave your comments, guys. We'd love to hear more about what's going on in your world and what kind of questions you have for us, because after all, at the end of the day, if you're not making investments in yourself, it's really hard to make investments in real estate or any investments that truly make sense. So invest in yourself. Spend some time. Do some research. We'll see you guys in a bit.